Hey guys, hope you're doing good. Welcome back to this amazing space. I just realized that most of you are having a big problem trading complex corrections, that is in terms of Elliott Wave analysis. And today, that is what I want to show you on how to trade complex corrections. When I talk of complex corrections, I'm talking about uh, corrections WXY, or I'm talking about W, uh, X, and Y, or can also be another correction that you can get is that is WXYXZ. WXYXZ. Those are the only two complex corrections that you can get in when you are an Elliott Wave enthusiast. So without wasting much time, I'm going to take you through this process on how to catch a good wave, when market is in a complex correction. So again, when you talk of complex correction, there are two things that you need to know when you are talking about complex corrections. Remember, we have three waves in this case, and these whole three waves are complex corrections. So most important thing that you need to know when you are trading this complex correction is what do you have on this W, and what you have on this uh, Y wave, these two waves. So these two waves, most probably they are always good waves of at least ABC. They can always be ABC waves. Again, this one can also always be an ABC wave. That is the concept behind this complex correction, that is WXY. So another most important thing that you need to know, and the most important question that maybe you can be or you might be thinking of asking, is if these two waves, that is wave W and wave Y, are ABC, then what do we expect on wave X? Wave X can be different types of waves, and this is a corrective wave of this corrective wave. I don't know when you're getting this point. I don't want to take you very fast, and I don't want to take you very slow on this. And the last aspect of this concept of trading this complex correction is you need to know the direction of the trend. You need to know the direction of the market trend. So this is again another good thing, because what we are going to be having on this space is, if you are going to trade Elliott Wave, then much of it is something that you already know, that you need to look at the trend of the market. That is a very important aspect of trading Elliott Wave analysis. So again, bring that, because I don't want to use this to trade maybe the past markets. I'm going to be showing you what we have on the future market, and that is another good advantage that you may be having when you want to trade this complex correction. So look, we are looking at Australian dollar, New Zealand dollar, that is Audi NZD. So if you look at Audi NZD, this is in terms of a daily time frame. So if you look at it in terms of a daily time frame, the most important aspect of this currency pair, the reasons why I'm choosing this currency pair is because of the structure, which we can clearly see that we have this wave. This is the swing. This is a good swing on this market. This is a good swing on this market, and as you can see, this swing just broke. This is a swing that just broke off, or rather took out the previous swing, the previous lower high of this market right at this point. So the reasons why, again, this becomes a very important swing, and you might be asking, which swing is really important? Is it the previous swings, or what are we really looking at? What are we really looking at? And that is the question that you might be, we might be answering you in a few minutes. So just be in touch. So looking at this, what we have right here is simple. This is the swing. We saw this market take out this previous swing low, and then it took out this previous swing high. And since this market took out this previous swing high, we haven't yet seen again market coming back to take out another swing low. What we are simply having right now is a corrective pattern. So this corrective pattern is complex. This is the complex corrective pattern. So the reason as to why this I'm looking at this as a complex corrective pattern, because I really need you to get the point, the concept around this analysis. So if you look at this keenly, we have two types of remember when I told you that when you're looking at a complex correction, that is WXY, we are looking at two corrective waves, that is wave W and wave Y again, and wave X. Remember, wave X can be a correction. It can be a pattern, or it can also be that is Elliott wave corrective pattern, that is ABC. So again, remember, corrections can be simple. Corrections can be simple, even though they can be deep. So what we have right now is right here. You can see that we are having A, B, and C. That is in this W, this wave W. We are having A, B, and C. So again, after this ABC, you can see that we are having wave X. This, I'm looking at this as wave X simply because of the retracement, simply because of this good retracement. If you have your fib right at this point, you can see that this market actually reversed around 0.78, around 0.78.60%, around this area. So again, this becomes a very good point. This becomes a very good point when you are looking at this correction. When you're looking at this correction, again, another most important thing, if this is going to be a wave, then we don't want market to take out what we have right at the bottom. We don't want this market to trade below this wave, because if it trades below this wave, then this we can simply be looking at something else, but not correction. So after ABC on wave W, we are seeing wave X, and then we can also see another wave, that is ABC right at this point. So this becomes another good point, A, B, and then C. So C is still in progress. C is still in progress. That means wave Y is still in progress. But when you narrow down within wave Y, we can see that C is still in progress. So this becomes important. Again, this becomes important in your analysis. This becomes important in your analysis, because I don't like to keep my chart looking very dirty and shoddy. I like to take out what is unnecessary, so that I focus on what is actually necessary. So when we just have this, this as our most important wave that we are interested in, that is AB, and then we can be looking at least point C to hit this point C to hit this line, or A to trade anywhere around this point 0.5 1.056, around that region. So when you narrow down to 4-hour time frame, this is exactly what we have in 4-hour time frame. So in 4-hour time frame, remember, in 4-hour time frame, what we are simply looking at is wave ABC of the complex corrective aspect of this complex correction, that is wave ABC. So this again becomes another good point. This becomes another good point in your analysis aspect. This becomes another most important good point in your analysis. So remember, this is wave C. This is wave C, and the wave C is very important. Wave C is very important. You know very well that wave C is an impulsive wave of the corrective wave, that is wave ABC. We have two impulsive waves on the corrective wave ABC, that is wave A and wave C. Those are impulsive waves on corrective wave. So this becomes important. If this is a corrective, if this is an impulsive wave, let me just take this out. If this is an impulsive wave, then you could be looking at it in terms of impulsive wave pattern. You could be looking at it in terms of an impulsive wave pattern. And if you're looking at it in terms of an impulsive wave pattern, what we have right here is wave 1, wave 2, wave 3, wave 4, right at this point. And then we expect wave 5. We don't know where it will fall, but we expect at least wave 5 to end around this point, around this region. So this is where we expect at least wave 5 to be ending, around this point. And how are you going? The most important question is, how are you going to catch a good reversal? How are you going to catch a good reversal? How are you going to catch a good reversal? So how you can catch a good reversal point on this market is simple, is very simple. You are going to be looking at the market structure. You are going to be looking at the market structure of this corrective, of this impulsive wave. So when you look at this, I still expect this market to be trending on the downer side, or to be a little bit bearish before we can think of reversing this market. There is no as to why I expect it to be bearish. I don't say, and my point is not that it has to be bearish, but I still, based on the market structure of this currency pair, I still expect it to be bearish. The reason as to why I expect it to be bearish is because of what I am seeing. We are not yet seeing this market making higher highs or higher lows. So this market, we are still going to maintain our bearish move, maybe up to what we expect, or what the region that we expect this market to hit before we can think of reversing this market. Again, maybe the question that most of you would be asking, or could be asking, is why is wave 5 such a long wave, or such a long wave? Yes, wave 5 is supposed to be an impulsive wave. We have three impulsive waves in this impulsive wave structure, that is 1 through 5, and the impulsive waves we have is wave 1, 3, and 5. Again, based on the rules of Elliott Wave analysis, wave 3 is not supposed to be the shortest wave. That is the point. Because most of you are aware, or most of you are conversant, let me say that with the fact that wave 3 is always the longest wave. But wave 3 doesn't have to be the longest wave. We have something we call extension. When we have extension on impulsive waves, extension can appear in wave 1, extension can appear in wave 3, and extension can also appear in wave 5. That is something we talk about we'll talk about in our next video, maybe in our next video. And most probably there are so many videos that are posted on this great space that is talking about extension, so you can't just be going through each and every video. Besides that, you are going to have an advantage of knowing how to trade Elliott Wave analysis. So how we are going to catch, getting back to what we are talking about, how we are going to catch the good wave, is we still expect this wave to be a little bit in a bearish move before we can think of going bullish. So when you look at this, we have the swing high right at this point. Again, if this is an extension, we could be looking at wave, impulsive wave, that is wave 1 through 5. Wave 1 through 5 of this impulsive wave. Wave 1 through 5 of wave 5 of this impulsive wave. I don't know when you're getting the point. And if you're not getting this point clearly, you can just rewatch. Take your time, rewatch this video once again, and I hope that you are going to get this concept perfectly clear. So this is what I have for you today. If you have any question regarding this uh, perfect long video, you can just comment down below. I'll gladly answer your question. If you enjoy this content, kindly give it a thumbs up, share, like, comment down below, and don't forget to subscribe so that you don't miss out on other perfect videos. This is all I have, and see you in the next episode, and have a successful week ahead. Thank you.